Welcome to the deep dive. Today, we're really cutting through the noise to understand how one top trader, known as Jinlog, navigates the complexities of the financial markets.
Yeah, it's fascinating stuff.
We're looking specifically at Cisco Systems, CSCO, but maybe more importantly, we're looking at a methodology, a really powerful, disciplined way to make sense of market movements.
Exactly.
So our mission for you, our listener, is to explore Jinlog's VPA Rhythm Method. And this isn't just, a set of rules. It's more like a unique lens for seeing the market's true pulse. We'll unpack how Jinlog applies this to Cisco, and doing that, hopefully distill some practical nuggets of wisdom, things that can help you grasp complex financial insights, quickly and thoroughly.
Like a shortcut to being truly well-informed.
Exactly, beyond just the headlines.
Yeah, and what's really compelling about Genlog's approach right from the start is how they tackle this challenge of information overload.
Oh, yeah. How so?
Well, they found that, quote, overreacting to every headline breeds overtrading and drains capital and time. That just immediately sets a tone for discipline.
Okay.
It advocates for a rhythmic way to engage with the market, not just reacting all the time.
Right, less knee-jerk.
Exactly. It's all about identifying the SAW, or as we'll call them, the key pivot points, and sort of aligning your actions with those high-impact events.
Okay, so Jinlog is basically saying don't chase every shiny object.
Yeah.
It sounds like a powerful blend of strategic patience and really precise timing.
That's a great way to put it.
So before we dive deep into Cisco itself, could you give us a clearer picture? What does this VPAR Rhythm Method actually entail at its core? Like, what are the fundamental bits?
Sure. At its essence, the VPAR Rhythm Method is about combining visible chart rhythms. That's, that you literally see on the price chart.
Okay, the patterns.
Right. With flow patterns,
Yeah.
which refers more to the underlying buying and selling pressure, how capital is moving. And the goal is to propose optimal entry and exit points. It's really a holistic view. It looks at the stock, its sector, even live indices.
The whole context.
Exactly. All to pursue returns, but with controlled risk. It encourages critical thinking, beyond just reacting to one piece of data.
So it's like learning the market's breathing and its heartbeat, almost.
Yeah, something like that.
Okay, with that foundational understanding of the method, let's turn our focus now to Cisco Systems, CSCO. Where does Jinlog see Cisco standing right now, especially, with earnings coming up? What's the current state of play?
Well, Jinlog observes that CSCO is currently pressing into the low $70. It seems poised for a retest of the $73 top in the short term.
Okay.
And potentially the $78 band for a larger swing move.
Right.
Which immediately raises a crucial question. What underlying forces does Jinlog see driving this potential upward momentum for Cisco?
And this is where it gets really intriguing, right? Jinlog points to two primary structural drivers shaping Cisco's path. Can you walk us through those? What are these big picture forces?
Absolutely. The first major driver identified is the Splunk integration.
Acquisition.
Exactly. It's significant because it's contributing directly to Cisco's security observability annual recurring revenue.
Right, the subscription revenue. That's key.
It's a huge strategic pivot, moving Cisco further into that highly valued, subscription-based software space.
Makes sense. And the second driver?
The second is the surging momentum in AI data center Ethernet. Specifically, Jinlog highlights their Silicon One combined with Nvidia Spectrum-X.
Oh, wow. So positioning for the AI boom.
Precisely. It positions Cisco incredibly well for the explosive growth in AI workloads because high-performance Ethernet is becoming the backbone for these massive data centers.
That's a profound strategic shift for Cisco, tapping right into the biggest tech trends. Now, beyond these growth catalysts, Jinlog also pinpoints specific price levels for potential pullbacks, correct? It's not just about going straight up.
That's right, yeah. Risk management is key here. Jinlog identifies pullbacks to $68.05 and $63.03 as valid reentry points if overall market volatility picks up.
Okay.
The advice is to closely watch the Tate quality near $73. That's essentially reading the market's body language, looking at the volume, the character of the trade.
Right, the conviction.
Exactly. And how the stock behaves around that $68.05 support level before committing to follow-through moves. You want to see conviction in the price action.
Got it. What's particularly insightful here, I think, is how Jinlog segments their market view across different timeframes. For you, our listener, this means understanding how a trading or investment strategy really changes based on your horizon days, weeks, or months. Could you break down these distinct views for us? The short-term, swing, and midterm?
Certainly. Let's start with the short-term view. This focuses on daily movements. Jinlog sees it as neutral to positive right now.
Copy.
If the stock stalls out at $73, the strategy is to allow for a checkback, a pullback, into the $68.05
Let it breathe.
Yeah. And only if there's a clear taper pair, meaning improved buying pressure and order flow, only then would a reacceleration be expected. So the immediate short-term target is that $73 resistance.
Makes sense. And the swing view. Daily to weekly.
So for the swing view, it's also seen as neutral currently. The key condition for adding risk here is holding $68.05.
That level again.
It's crucial.
Yeah.
And this needs to be combined with what Jinlog calls Trap 23 resolved, which basically signifies that a prior kind of deceptive market move has been definitively overcome. It's just a stronger foundation.
Okay, like shaking out weak hands.
Something like that. And this also requires BW re-expansion, meaning the Bollinger width, which measures volatility, is broadening. That suggests a confirmed and persistent trend.
Right.
The swing target is $78 with a crucial pivot point, or CHA, at $63.08, and an optimal entry seen around $68.05.
All right. And the midterm, looking out over months.
Finally, the midterm view is positive. Here, the ARR expansion and AI networking tailwinds are seen as firmly intact.
The big structural drivers.
Exactly. Jinlog's base case is a re-challenge of the $78-80 range. So the midterm target is $78 plus SIM, with entry points identified lower down at $63.03, and an even deeper pivot point, another sure, at $55.03.
So it's never just about hitting a price target, is it? It's about specific conditions needing to align with that price. And this deep reliance on charting what Jinlog calls chart commentary seems critical too.
Oh, absolutely. Jinlog highlights that price is currently probing the upper rail in the low $70.
Okay.
And historically, similar chart setups have often shown a merge advanced pattern, but only after a brief period of consolidation or digestion.
Okay.
So the crucial takeaway for any trader, according to Jinlog, is to demand a visible improvement in turnover prints before chase entries.
Don't just chase momentum blindly.
Precisely. You're not just buying because it's going up, but because the market's internal rhythm, the volume, the quality of trades is actually confirming the move.
This brings us right to the core of Jinlog's approach, the rhythm analysis itself. How does Jinlog uniquely break down these rhythms for each time frame? And what specific quant aids, those quantitative tools, do they use to confirm signals and cut through the noise?
Right. The rhythm analysis is quite layered. It reflects the market's complex dance, you could say.
Okay.
For short term, the trend is seen as accelerate hold. The rhythm is rise hold, but the flow is we can rotate.
We can rotate. What does that imply?
It means that even within an upward trend, Jinlog is observing these micro pullbacks around resistance levels. It indicates a need for caution before potential reacceleration. It's about managing those quick dips.
Got it. And for swing?
For swing, the trend is still accelerate hold, but the rhythm shifts to descend turn, and the flows converge adjust. Here, confirmation really hinges on that $68.05 re-support holding.
That level keeps coming up.
It's the key pivot. Holding it signifies that any short-term dip is likely just a setup for the next leg higher.
Okay. And midterm?
For midterm, the trend remains accelerate hold. Rhythm is rise hold, and flow is expand hold. This is the strongest signal combination, really underscoring that the structural upside from the subscription and AI networking themes is, truly intact.
Strong alignment there.
Yeah. And as for the quantitative aids, Jinlog uses these to filter out false signals, essentially. They look for an RSI reclaim of neutral. That's the relative strength index moving back above 50, showing renewed strength.
Mm-hmm.
They also watch for MACD re-expansion, where the MACD indicator lines spread apart again, confirming strengthening momentum.
Okay.
And additionally, BW, 812-1840-609, multi-expansion. This refers to the Bollinger width expanding across multiple time frames simultaneously.
Wow, multiple time frames.
Yeah, it's a powerful confirmation of persistent broadening trend strength. These aren't just standalone signals. They're used as confirmations of the larger rhythm identified visually.
So it's a really sophisticated interplay of visual patterns and these numerical confirmations. Now, beyond the technical rhythms, Jinlog also integrates broader financial data, news catalysts, potential risks. What does the financial flow tell us about Cisco's recent performance? And what external factors should our listener keep in mind?
Well, Cisco's recent quarter saw them deliver mid-$14 billion in revenue with non-GAAP EPS near the high $90s. Pretty solid numbers.
Decent, yeah.
Their guidance, while it did acknowledge tariff impacts, maintained what Jinlog described as a balanced tone. But the critical financial takeaway here is that continued expansion of annual recurring revenue, ARR,
There it is again.
and the significant growth in their subscription software mix, which is heavily supported by that Splunk consolidation we talked about. This is where Cisco is really making its fundamental shift.
Got it. And news and risks, especially with earnings approaching.
Yeah, the upcoming earnings window is always a critical event. Jinlog points out it typically introduces 24 72-hour order flow distortions, basically. A lot of unpredictable volatile trading around the announcement.
Choppy waters.
Exactly. So their advice, trade at the rails, meaning wait for price to hit key support at $68.05 or resistance at 73.20 rather than getting caught in the noisy center during that period.
Wait for clarity at the edges. Makes sense.
Yeah, wait for clear signals at those key levels.
So basically, avoid the chaotic, unpredictable middle ground. But what about the larger macro picture impacting Cisco beyond the company itself?
Right. Beyond the company's specifics, that broader AI data center Ethernet trend, especially with Silicon One and the Nvidia Spectrum-X partnership, remains a major tailwind. That's driving future growth potential.
Huge potential there.
Definitely. However, macro and policy risks are always present.
Yeah.
Things like tariffs, new export controls, or just broader capital expenditure down cycles in the economy.
If companies pull back spending,
Exactly. That could potentially slow down networking and security spending across the board. It just reminds us that even with strong company fundamentals and great execution, these external economic and political forces can exert significant influence.
absolutely, context is everything. So this analysis is incredibly comprehensive, micro, macro, technical, fundamental. But how does Jinlog translate all this into actionable strategy scenarios for different types of long positions? This feels like where the rubber meets the road for practical application.
Yeah, this section is crucial because it outlines the execution, the practical side of the VPAR Rhythm Method. Let's break it down. For a short-term long, the ideal entry described as an orderly pullback with tape repair down at $68.05.
Okay, buying the dip, but carefully.
Right. Conditions include trap resolution 023 again, showing the market move beyond a prior deceptive move, and the rhythm shift from compression to re-expansion, signaling renewed momentum.
Signs of life returning.
Exactly.
Right.
Management involves scaling out profits as it approaches $72 and $73, and then potentially re-entering on the first controlled pullback after a clean break above $73.
Okay, clear plan there, swing long.
For a swing long, the entry is either on resupport at $68.05, or if it breaks lower, looking to rebuild inside the $63 top box.
So define zones.
Define zones. Key conditions are trap 23 still resolved, RSI back above neutral, confirming momentum, and a MACD signal cross-up, indicating a bullish trend change is underway. Management here involves scaling towards the $78 target, but reducing exposure if momentum fades due to, time correction if it just goes sideways for too long.
Got it. And the midterm long, the bigger picture play.
For a midterm long, Jinlog suggests staged buys near $63.03 and potentially even deeper at $55.03 if there are significant market resets.
Building a position over time.
Exactly. The conditions for this longer-term play require multi-time frame pivot alignment, meaning key turning points are lining up across different charts, weekly, monthly, and that BW81218 and 406090 expanding together signal we mentioned. That's a strong sign of robust expanding trend strength.
Very specific condition.
Very specific. Management focuses on taking partial profits near $78, $80, but keeping a trend sleeve like a core position if the underlying market rhythm stays in expansion mode.
That really showcases the discipline, doesn't it? Defined entries, specific conditions that must be met, clear management strategies for each scenario.
Absolutely. It's about having a plan before the market moves.
Right.
Reduces emotional decision-making.
Right. Now, it's clear Jinlog combines multiple tools. They even incorporate Elliott wave analysis. How does this, intricate technical pattern analysis fit into the broader picture of their method?
Elliott wave provides another layer of structural understanding. It looks for repeating patterns in market cycles, these sort of fractal waves.
Okay.
For the short term, Jinlog favors an interpretation of an ongoing wave 3, which is typically a strong impulsive move. This suggests that if the 73.30 attempt fails, it likely implies wave 4 digestion inside $68.05, a corrective pullback.
A predictable pause, potentially.
Potentially. For swing trading, completing that wave 4 completion, wave 5, requires $68.05 hold plus MACD re-expansion. So the conditions link back. And for the midterm, they see an extended 1-3 variant, a particularly powerful bullish pattern, which, importantly, is supported by those fundamental drivers, ARR growth and AI Ethernet adoption.
So the waves align with the fundamentals.
That's the idea. It's about how price structures itself in relation to these key pivots and the underlying story.
That's a really detailed dive into technical patterns. And what about the community flow? What's the broader sentiment, the chatter surrounding Cisco among other traders and investors? How does Jinlog factor that in?
It's interesting. The community's positive keys, identified by Jinlog, align perfectly with the structural drivers we've been discussing. The Splunk integration, the AR expansion, and the strong tailwinds from AI data center Ethernet. People see the potential there.
So the market generally gets the bull case.
Generally, yes. The negative keys, however, tend to revolve around valuation versus growth pace. The classic question of whether Cisco's current price is justified by its growth rate.
Is it too expensive?
Right. And also the perception of Cisco still being primarily a hardware frame company, which some believe could lead to multiple compression risk on misses. If they miss earnings, the stock could get hit harder because it's seen as hardware.
Okay, that makes sense.
Jinlog notes that overall bias generally improves after strong earnings prints, but importantly emphasizes respecting that event-driven volatility spike that comes with earnings announcements. Don't get caught offside.
Right. So bringing all these intricate threads together, what's Jinlog's overall outlook for Cisco? And what are the absolute key risks our listeners should keep front of mind if they were following this analysis?
The overall outlook remains positive, leaning heavily on that subscription software mix and AI networking partnerships to support a retest of the $78-80 price box. That's the base case. However, this is strongly provided that the upcoming earnings report and guidance actually confirm these positive trends. Confirmation is key.
Contingent on the news.
Very much so. The primary risks to this outlook are: 1, the persistent tariff policy noise that can impact global trade; 2, potential CapEx down cycles, where companies broadly cut back spending; and 3, the ongoing execution risk of the Splunk integration they need to make that work smoothly.
Integration is always tricky.
Always. And Jinlog's final emphasis, really a key takeaway from their entire method, is on enforcing level-based risk rules on a $68.05 layup break. If that key support fails, you have to respect your stops.
Discipline again, paramount.
Absolutely. It highlights the importance of disciplined risk management, knowing your exit points and sticking to them no matter what.
And what's fascinating is that the source material itself in its deep dive section provides this kind of execution roadmap. It emphasizes outer rail executions trading at those key levels, $68 and $73, and it even defines rebuild zones, $63.03, $63.08, $55.03 for staged accumulation if things pull back further. It really reinforces this idea that Jinlog's method isn't just about predicting. It's about having a pre-planned, disciplined response for basically every scenario.
Like having a playbook for the market. Exactly. Ready for different outcomes.
What a journey through Jinlog's methodical analysis of Cisco. We've seen how a top trader blends these, big picture fundamental drivers like AI and subscription growth with really granular technical details, rhythm analysis, and these precise, disciplined entry and exit strategies.
It's a compelling example of how a systematic approach can really help cut through the chaos.
It truly is.
And this raises, I think, an important question for you, our listener. In a world that's just saturated with information, constant noise, how can adopting a methodical framework, something like Jinlog's VPAR Rhythm Method, help you cut to the static? Help you identify the true pivot points, the HOS in any area you're trying to understand, not just finance?
That's a great point. It applies broadly.
Yeah, it's about recognizing that knowledge is most valuable when it's deeply understood and actually applied, and that looking at things from multiple perspectives truly enriches your understanding far beyond just, a single data point or headline.
Exactly. And just to reiterate, as top trader Jinlog clearly states, nothing we've discussed today constitutes investment advice. All decisions, all responsibility rest entirely with the individual investor.
Crucial disclaimer.
Absolutely. What we truly hope you've gained is maybe a clear structure for processing complex information, perhaps some memorable details about Cisco and this method, and maybe even an aha moment about how intricate data can be distilled into actionable insights.
Hopefully sparking some ideas.
Yeah. That's it for this deep dive. We hope you feel a little more well-informed, maybe even inspired to seek out the hidden rhythms in the information you encounter every single day. Until next time, keep digging deeper.